Welcome to today's financial news update. In today's discussion, we're addressing a pressing question among investors. Could the stock market experience a downturn comparable to the 2008 financial crisis? We're currently seeing significant interest around the topic of potential economic downturns and what they mean for investors. This comes amid fresh concerns about similar patterns of interest rate cuts as observed before previous major market crashes. A detailed analysis reveals that similar economic indicators, such as rate cuts observed in both 2008 and the present year 2024, have historically preceded downturns, raising questions about potential future market behavior. Understanding the stock market's dynamics involves a deep dive into economic concepts such as rate cuts, hikes, GDP, and inflation. These factors play a crucial role in shaping market outcomes and can guide investors during times of economic uncertainty. In conclusion, during periods of market volatility, it is advisable for investors to focus on companies with strong fundamentals. Despite potential downturns, these companies often have the robustness to not only endure but also recover and prosper, providing long-term growth opportunities for their investors. Please like, share, and subscribe for more videos like this. Thank you so much for watching.